Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HX Building Materials Group Co. Limited, latest report. HX Building Materials Group Co. Limited offers a diverse range of businesses and services. At its core, the company manufactures and sells cement both domestically and internationally. In addition to cement, HX also provides aggregates, ready-mixed concrete, and packaging materials. The company's product offerings extend beyond these basic building materials. It produces mortars, various concrete products such as bricks and slabs, aerated concrete products, environmental protection walls, curtain wall hanging boards, and anti-corrosive tiles. These specialized products cater to specific needs in the construction industry. HX also engages in waste management through its operation of waste management platforms that convert selected waste streams into fuels. Furthermore, the company invests in research and development, particularly in data science. Additionally, it develops software to support its operations and other business ventures. HX Building Materials Group Co. Limited, market capitalization of $42 billion, is significantly larger than the average industry peer of roughly $3 billion. This shows that HX Building Materials Group Co. Limited holds a significant advantage in their industry. HX Building Materials Group Co. Limited trades at a lower price-to-earnings ratio of 10 times and a higher price-to-book ratio of 0.88 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than HX Building Materials Group Co. Limited. Itself, the company maintains a moderate leverage profile, with liabilities making up 50% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 5.72%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be attributed to several key factors. On the growth side, overseas business expansion has been a significant contributor, with a 48% year-on-year increase in revenue. The development of new products, such as ultra-high-strength cement-based composite materials, has also driven growth. Additionally, cost reductions and efficiency enhancements through benchmarking initiatives and technological upgrades have helped boost revenue. Furthermore, increased market capitalization and the expansion of new energy vehicle projects have contributed to revenue growth. Moreover, deepening supply chain potential for value creation has also played a role in driving revenue upwards. On the other hand, domestic cement and clinker sales decline, decrease in RMX sales, and domestic demand for cement decline are the primary drivers of revenue decline. These factors highlight the importance of diversifying business operations to mitigate risks associated with domestic market fluctuations. The net income of the company experienced a significant increase of 18.09% in 2025 compared to 2024. This growth can be attributed to various factors, including sustained enhancement in growth momentum and profitability, policy adjustments, and capacity management. The cement gross profit margin saw an impressive rise of 9.35 percentage points year-on-year to 32.72%, while the concrete business gross margin increased by 3.44 percentage points year-on-year to 15.46%. The operating profit also witnessed a notable increase of 18.56%, with the profit before tax rising by 20.39%. The net profit attributable to shareholders saw an identical growth rate of 18.09%. Furthermore, the operating profit margin and net profit margin showed improvements, increasing from 12.4% to 14.1% and from 8.6% to 10%, respectively. The reasons behind these changes can be attributed to the company's efforts in optimizing cost management, increasing revenue growth in aggregates business, and improving service processes and systems. Additionally, the Consolidated Profit Foundation, enhanced operational efficiency, and risk resistance capabilities have also contributed to this positive trend. Overall, the company's net income and profit margins have shown a substantial improvement, indicating a strong financial performance in 2025. The company's financial performance indicates a positive trend in operating cash flow. According to the provided information, the net cash flow generated from operating activities in 2025 was RMB 6,694,037,666, representing an 11.99% increase from the previous year. This significant increase suggests that the company is efficiently managing its operations and generating sufficient revenue to cover its expenses. Furthermore, the fact that both 2024 and 2025 saw positive net cash flows from operating activities, RMB 5,977,317,233 and RMB 6,694,037,666 respectively, indicates a consistent pattern of positive operating cash flow. The increase in cash and cash equivalents by RMB 607,686,803 in 2025 also supports this conclusion. Overall, the data suggests that the company is generating sufficient operating cash flow to support its growth and operations, indicating a healthy financial position. The performance of various regions and segments in the market has been analyzed. On a positive note, several countries have shown impressive results. Tajikistan, Kyrgyzstan, Uzbekistan, Nepal, Tanzania, and Zambia are among the top-performing regions, indicating strong growth and development. In contrast, some areas have struggled to keep pace. The cement industry in China is one such example, where performance has been subpar. This discrepancy highlights regional variations in market trends and opportunities for improvement. Management is optimistic about the company's outlook, citing new acquisitions as a key contributor to its consolidated financial statements. This expansion through strategic acquisitions is a core component of the company's strategy, aimed at increasing its presence in the market. The numbers back up this confidence, with operating income, operating profit, and net profit all showing significant year-over-year growth. A 3% increase in operating income and 18-19% increases in operating profit and net profit demonstrate a clear upward trend in the company's financial performance. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would be considered noteworthy. This suggests a stable and consistent approach to business operations, with no major changes in the company's portfolio or structure. The company has a history of distributing profits to its shareholders through dividend payments. In 2025, a cash dividend of RMB 0.55 per share was distributed to all shareholders, indicating that the company prioritizes returning value to its investors. Additionally, the company also paid dividends or profit to non-controlling shareholders of subsidiaries in the same year, further demonstrating its commitment to shareholder returns. That concludes the financial summary for HX Building Materials Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.